I'm sitting with someone who made more money before 18 than most people make in a lifetime. They call him Crypto Kid, but the real question is, was it genius, timing, or luck?
And when I tell them how to get rich, this is how to get rich from crypto, they don't take it seriously because it's so easy.
Who do you think wins in crypto in long term, the builder or the hype sellers?
There is no such thing as quick money. There is no such thing as overnight success. America doesn't make anything close to 30.6 trillion to pay that off. So what do? They print money to pay off the debts.
There's no way this is how you can get millions.
Wealth comes from not trading. You need to be an investor. Warren Buffett made tens of billions because he was an investor. It feels too simple. If you want to get rich from crypto, that's the formula.
Welcome to the DealMaker Show, the only show in Middle East led by a woman, where we talk about mindset, money, investment, and what are the trends to invest. Today, I'm sitting with someone who made more money before 18 than most people make in a lifetime. They call him Crypto Kid, but the real question is, was it genius, timing, or luck? Welcome, Efe Crypto Kid. How are you today?
Well, thank you so much for having me on, Ness. It's an honor. You have an incredible setup. I've never been on a podcast with such professionalism before. So
thank you.
Thank you for having me on. I'm great.
So let's dive in. Before the money, before Twitter, before your YouTube channel, before the flex, who were you actually?
Well, I don't think who I am fundamentally has changed or will ever change. I grew up in the Emirates. I lived in Sharjah for about 10 years with my family. They immigrated from Turkey, from Istanbul to Sharjah. This was 2008. So I grew up there in a British school, standard normal childhood. We moved to Dubai in 2017. And I've been in the Dubai Emirates ever since. I've always had a passion as a kid for acting, being on screen, being on stage. In fact, when I was 7, 8, 9, I was fixated that I wanted to become either a musical theater actor or an on-screen actor. And I did a couple of years in theater. But you know, the opportunities aren't as vast now it is. Now the UAE is growing in its dominance of media. But you didn't have the facilities you have today back then. So I could do whatever I could do with my young age. I did a little bit of modeling, a little bit of musical theater. And when the pandemic hit, I couldn't continue that anymore. So I pivoted into voice acting. And we can get into that later on how I found crypto. But I'm the same person. I'm just the same kid that likes to be on screen, likes to talk. And that's my passion and I live by it.
Oh, that's amazing. So on your journey, at what exact moment did you realize my life is about to change? Because it changed.
Well, look, I'm very, very grateful that I grew up here. So I grew up in a country where, you know, as a kid, you're not aware of these things of, okay, you know, there's different lives or different lifestyles to live. You're just sort of with your parents and you follow them around and you do whatever your family is doing. So I wasn't, you know, because I was so young, I wasn't dreaming to live a certain lifestyle. I came across crypto, which when I entered it came with a certain, you know, came with the perks of living a certain way. But I wasn't chasing a certain life to live. When I was in school, I liked the subjects that I liked, like business, literature, drama, but there were so many subjects I didn't like. And when I first started doing acting and then later crypto, it was sort of a way, an excuse to not continue a traditional form of education. It was a way for me to do something else that could maybe break me free from that standardized system. So I started doing what I was doing just to find what I love and live by it, rather than going for a certain lifestyle. And in Dubai and in the Emirates, there's so much opulence, so much beauty, so much luxury anyways, that was sort of the standard that I, you know, grew up in, if that makes sense. So I wasn't chasing anything more from the luxury point of view.
So it was just a logic way to live here, and you need actually money to maintain this lifestyle. I'll say in Dubai is more maintaining the lifestyle that you see rather than like.
well, you know, again, I was a kid when I started, so I had the support of my parents. I had a home, no rent to pay, school is paid off for, etc., etc. So I had the freedom. This is why starting young is cool, because you have the freedom to experiment. You have the freedom to step into the deep end without having the liabilities. And I got extremely lucky. So when it goes to the starting point of your conversation, was it luck or was it hard work? I put in a lot of hard work into getting good at the things that I'm good at, which in turn translated into an income. And because of my industry and because of finance and investing and the incomes there, I was able to make enough to sustain myself in this beautiful country. So I'm very grateful for that. But I had the luck of starting young, so that, you know.
Yeah, you started when you were 14?
Oh yeah, crypto when I was 12 to 14, yeah.
So you were 12, 14?
12, I got immersed into it. It was when I first found out about it, but then 14 was when I started professionally doing what I do in crypto.
Amazing.
Thank you.
And basically, for the audience, I think it's very important to also explain, because you started where you were 12, 14. I'm sure you didn't put 10,000 and thousands of dollars. You might have started very small. Yeah. I can't foresee parents giving thousands of dollars for a 12 years kid. So you start with a very small amount, and then you educated yourself. What was your journey to? You had several passion, right? So how was your journey to say, okay, I'm going to put money on it and see, like, is it my path or no?
Well, so I did voice acting and musical theater gigs when I was a lot younger. Musical theater didn't pay an income. It was sort of more.
You were paying for it.
Yeah, exactly. You pay to work 6 hours a day of rehearsals and a lot of stuff. You have the dance choreography, you have the singing, the acting. It's a lot that goes into it, but you weren't paid. It was a paid to get experience sort of thing. But with the voice acting, I saved up like, I think $1,000. And that was from about 4 gigs. So I had $1,000 to my name. And I was very curious at that time. When the pandemic hit, you guys know, trading, investing, it became a big topic. Everybody was at home. People got stimulus checks, so out of nowhere you had extra money in your pocket if you're in the US to invest capital into. So it was a time where finance and trading became this big thing online. So I had a little bit of money. It was the end of 2019. I had some time after school, and I was like, okay, what can I do with this? And there was a question in my head of how people got wealthy, how people created millions of dollars of wealth. And with my 12-year-old research skills, I found out that it was mostly from investing or from having equity or ownership or putting money into the markets. And I wanted to do that. I wanted to learn how I could do that. And whilst, again, researching, there was a video that popped up from an analyst named by Raoul Pal, a very famous analyst in crypto. And in 2020, 2019, he was sort of projecting a cryptocurrency called Ethereum to go to many, many thousands of dollars. And it was just a couple of $100 then. And I felt like, okay, I have $1,000, I can sort of afford it, I can buy into it. Wow, this is a big opportunity. And I love that interview that he posted. And that's when I fell into the big rabbit hole. Because when you get into investing, trading, cryptocurrency, there's always this surface level understanding that people have. Okay, you know what, digital coin, I put money into this thing, over time it grows, whatnot. But in reality, there's so much beneath the surface level of the iceberg. It's tremendous amount of stuff going on beneath it. And it requires years and years of being in that industry to really uncover the entirety of that iceberg. So I fell into it about now 5-6 years ago, and I'm still in it, still discovering it. But it's great. I love it. I love researching. I love looking at macro concepts, macroeconomics, breaking them down, extrapolating data to see what can happen next, and giving that to my audience. It's great for me. I have an OCD brain, so I'm always like constantly stimulated and thinking, and just for me channeling it into charts or a piece of information, building a narrative, breaking it down calms me. It's therapeutic. But yeah, we can go into those details of specific charts in the economy, I'm sure, in this podcast. But yeah, I hope I covered your question.
Thank you so much. Thank you. It's very interesting to hear about how the new generation is so curious and look on some concept. At 12 years, I was definitely watching Spice Girls. So
well, yeah,
not looking at how being wealthy, but I think that's very interesting for the audience, because there is this generation gap where, we also have to hear what's happening, and especially on the crypto, in the crypto space, like, will you say that, who do you think wins in crypto in long term, the builder or the hype sellers? Because this is really something that,
Well, I'll be completely transparent with you. I did get into crypto initially to obviously take my $1,000 and make it into something more. So the quick potential return aspect was the initial stimulants into getting me in. And that's fine, because you later learn that there is no such thing as quick money. There is no such thing as overnight success. And even if you do get it, it's very likely you will lose it in the same short period of time. You look at lottery winners who overnight get millions of dollars. A majority of them end up being homeless or end up going into bankruptcy because they don't acquire the experience
on how to handle this amount of money.
On how to handle it and how to scale money and how to make sure it remains. So it's always a journey, and you need to be patient. Again, if you start younger, it's easier to be patient. So I have that luck on my side, and I encourage parents to build an environment for their kids to be curious on the right topics and to go out and chase them if they feel passionate about it, especially financial literacy, because you don't get it in school. Yeah. You don't get taught how to invest, what are taxes. You get taught a lot of theory-based things in economics and business. A lot of the themes that I learned about, I don't apply, especially the economic theories. It's just not how things work. Mm-hmm. They don't teach you real world. So you as a parent need to create that environment yourself so that kids are educated on it, because if they can develop spending habits or saving habits from a young age, getting a credit card where they can sort of do chores or do things to help out and they get a little bit of an income, and then spending it, tracking it, these are very, very valuable for the long term. And I want to emphasize long term because that is how you build wealth. So in crypto, there's a simple formula that people don't want to know about. And when you do tell them this, and when I tell them how to get rich, this is how to get rich from crypto, they don't take it seriously because it's so easy. The mind loves to overcomplicate concepts. They love to overcomplicate how to get rich. When you give them the simple formula, they don't do it. It's so easy to do, so easy to understand.
They feel cheated. They feel like, oh, he's lying. There's no way it's working.
Yeah.
There's no way this is how you can get millions.
It feels too simple. Mm-hmm. So the mind completely dismisses it. In the moment, they're like, oh, interesting. But they never end up doing it. I'm going to share it with you right now. And they want to overcomplicate it. So that's what ends up happening. But the real way to generate wealth in crypto is to, first of all, have a passive income. Not from working in crypto necessarily, but step one is to have an income, whether it's from a job, whether it's from a side hustle or business. You need a revenue stream to invest. Wealth comes from not trading. Trading is good as a passive income, but if you want to become wealthy, you need to be an investor. Warren Buffett made tens of billions because he was an investor. So to become an investor, you need capital to invest with. So step one is to find passive income. It could be a job, that could be a side hustle, it can be a business. And then, if you can save a majority of what you make, I'm happy that I'm not a big spender. I don't spend much, so I can save about 80%, 90% sometimes of what I make per month.
You still live with your parents?
I don't, no.
Because Dubai lifestyle is expensive.
I know, but I'm very grateful that I can save a good amount. And with that amount that I save, I invest not thinking this money is going to make me richer tomorrow, but it's going to make me wealthy in 10, 15, 20 years. When I look at crypto, what is going to stay for 10, 15, 20 years? I'm certain of Bitcoin, Ethereum maybe, but the rest of the cryptocurrency assets, it's a huge question mark if they will remain or not. 99% of projects have a business. That business is creating a token, hyping the token up with whatever sort of sector that project is in. It could be DeFi, it could be RWA. Oftentimes, it's just a pitch deck and a roadmap. They sell that to you with the token, they collect money from the token, and that's their income. That's 99% of projects. And then you have this 1% that do something, they solve a problem, they fill a gap in the market. And their coin is interjected into that ecosystem in a utility way. It generates something. There's a purpose for the token or coin to exist. 99% of coins, the token is there just to take people's money, but only the 1% are useful. So what are those useful coins? They come and go, because sometimes there's a new project that's better, the old one dies, right? I only know that Bitcoin is here to stay. It was the first one. It is the most decentralized cryptocurrency out there, meaning nobody can interfere with it.
And government are investing in it, so it's a green flag.
Yeah, governments are investing. Since 2024, you have the biggest institutions in the world, institutions that control collectively $17 to $18 trillion, creating products for Bitcoin for other companies and wealthier individuals to buy into. What is that doing? They create their products, which happen to be the most successful products for names like BlackRock. The ETF for Bitcoin was the most successful financial product they launched. That's driving in long-term capital. These players are not here for 1, 2, 3 months. No, they invest for their Roth IRAs. They invest for their pension funds. They invest for the long term. So you're having sustained, constant capital come in into an asset that was the first cryptocurrency to be invented. There is no owner. There is no CEO. There is no board of directors. It cannot be governed by a singular entity. I know that Bitcoin is going to stay. Not sure about the rest of the cryptos. So with the 90% or 80% of the income that I generate that I can put aside and live minimally happily, but you know, not go too over the top, I can take that and I put it into Bitcoin every single month. It's very boring, but there's something called compound interest. When you look at the past 15 years of appreciation in Bitcoin's history, you see an average return of about 27% per year. When you look at the previous 15 years, 27% to even 40%, depending on certain things you want to include, but let's say 27%. The expected growth of Bitcoin over the next 15 years is about, it's about 50% when you look into prior history, and the expectation is 27% growth per year from now on until the next 15 years.
Okay.
So when you invest, let's say $10 a day into Bitcoin, and you do it without selling for 15 years, right? You're investing only a couple of tens of thousands of dollars over that 15 years with your $10 a day purchase. But with compound interest, that accumulation of 27% per year, plus inflation, money is going down. They print more of it to solve their problems. There's $38.6 trillion of national debt. They need to print more and more and more to pay it off. America doesn't make anything close to $38.6 trillion to pay that off. So what do? They print money to pay off the debts. When you print more of something, its value goes down if demand cannot sustain. So the dollar is losing its value. Assets that are seen and recognized by the institutions, like you said, Bitcoin, gold, silver, equities, they go up because the dollar is falling. Capital flies into them to avoid inflation. So you have monetary debasement. That's the value of money coming down. Then you have the daily buying pressure of Bitcoin, people that buy in with their capital, the institutions, the companies, being 3.5 times the amount of new Bitcoin issued into the supply. That's a fact. 3.5 times of the new Bitcoin that's coming into the supply on a daily basis from mining is being bought by companies and being bought by institutions. So demand is exceeding supply. You have these two big things that over the next 15 years will cause your money, the $10 you put in, to exponentially scale, right? And you can run this through your ChatGPT or Grok. You can say, hey, I want to put $10 of dollars into Bitcoin every single day for the next 15 years. With an average yearly appreciation of 27%, how much would have I invested? How much money will I have made? It's going to be a couple of tens of thousands of dollars of investment, around 30, 40, 50, and you will end up making about $1.5 to $2 million. So this is the easy formula, right? If we assume that the things that I've said are true and will continue to be truth, and if you want to come to your own conclusion with that, you need to study the history of money, how money is made, how the financial system works, how Federal Reserve banking works.
Yeah.
Just last week, the dollar lost 2% of its value in one singular week. That's going to continue and scale on. You know how the politics are going on.
Yeah.
People are losing trust in institutions. People are losing. We'll jump to that.
Yeah.
People are losing trust in centralized authority.
Yeah.
They want to jump into permissionless, no trust money, hard money like gold, silver, and Bitcoin, which is better than all of them. We'll talk about it. So when you consider those things, I don't see a 27% per year appreciation being delusional at all. I see it as conservative. So if you can save, it doesn't need to be 90, 80% of your income. That's an outrageous figure, and it's non-realistic for most of the people watching. But if you can put $10, $20, $30 a day into Bitcoin and do that for 15 years, then it's going to accumulate to a lot. And it's going to help you. Maybe it won't help you, but it will help your kids. It will create generational wealth. So that's what I will say. If you want to get rich from crypto, that's the formula.
Thank you so much, Efe. So the financial literacy is definitely something very important, and I really appreciate that this is basically what you're saying to the audience, that they can say whatever you say, of course, they have to check, and even you have to check whenever you listen to someone.
Of course, yeah.
But financial literacy, understanding the financial system is very important, because we're going to jump to the geopolitics side of it, as it's really related. We've seen crazy stuff happening that no one has ever seen. I feel like every day when I wake up, it's like a TV show.
Yeah.
I don't know, we might be in a simulation, but this is another subject. And everything has a big impact. We can go back to when Trump was elected for the second time, and there were a pattern, like whenever he was elected the first time, the gold went down, the second time similar. So now a lot of things are happening. I see, like I was watching your latest video on like what's happening on Bitcoin, what's happening, guys. So everyone is like on the verge of like making some moves.
Yeah.
So can you explain to the audience, and you started listening and understanding the financial system when you were 12. So let's try to make it simple for people that are not, maybe really aware, and how it impacts actually how the geopolitics impact the price of the gold, the price of the silver. Why, like you mentioned, so you pretty much
so what I'll do is
inflation.
I'll start off with the phrase you said, every day feels like a TV show.
Yeah.
I'll explain that. And then we'll go into how things affect markets, how specific geopolitical events affect markets. Yeah. And then I'll give you a brief history of money and how the financial system works, if that's okay.
Yeah. And let's start with what happened in the market when Trump took Venezuela president I don't know if we can call it hostage or.
Well, so
I think this is one of the big events that everyone has seen in the planet.
yeah, so there's certain events that influence markets. First, we need to understand that equities, when I say equities, I'm referring to stocks, I'm referring to the S&P 500.
S&P 500.
Right? These are considered as equities. That's the risk-on market. Bitcoin, cryptocurrencies are included. It's called risk-on, right? So people tend to invest in companies when there is a good condition of doing business. You would only invest into Apple if you have the certainty, and certainty is going to be a key word. If you have the certainty that there are good policies, legislation, investment happening in the market which Apple sells products to. So you need stability.
Yeah.
To invest into companies, that's what the stock market is comprised of, you need certainty and stability. Now you also have a risk-off market. That market is comprised of hard money, mostly of gold and silver. Throughout tens of thousands of years, gold has been the place that people stored value in. It's a precious metal. You have to put in work. When I say hard money, you have to put in work to be able to extract gold from the ground. There's an associated cost to it. You need to put in work to get gold from the ground, correct? And there's a limited amount of resources of gold. There isn't an infinite amount of gold. Yes, there's an inflation of the gold supply of about 2.5% per year, but you don't have infinite resources of gold. So there's work done, a cost attributed to getting the gold, and there is a finite supply. We don't know the exact number of supply, but it's a finite supply, not unlimited. So that is classified, or has been classified, originally as the money. That was the money.
Yeah.
You extract it, it has value because you put in work to extract it. There's a finite.
Precious metal.
It's a precious metal. You can use gold to manufacture things, create things, which we found out later on. But that's what associated it with value. Yeah. Right? So that became the intermediary for transaction. Before that, it was bartering. I gave you bread, you gave me clothes, for example. So we switched to an intermediary, and that was gold. So when we look at gold today, we use the dollars to transact with. There is a paper money, which before the 70s, the paper money that was in circulation was attributed to the amount of gold countries had. Yeah. It's not feasible to carry gold bars with you, shave off little bits, and then weigh it, and then, transact with it to get something in return. That's not a feasible thing to do. Yeah. So government said, hey, trust us. We will have X amount of gold reserves, and we will put a dollar banknote attached to it to represent the amount of gold that we own. So you don't have to carry the gold with you. You can just carry paper. Much easier. It will have its values, and you can transact. Makes sense.
And this is backed up by the bank.
And it was backed up by the gold reserves of the country. Then comes Richard Nixon in the 70s, early 70s, and you get rid of the gold standard. Now you go into a system where the money is no longer supported by your precious metals. It is supported. I know I went into how money works, but we sort of need to understand it first.
It's okay, don't worry.
I realized.
It's okay.
So then you went into a system where the dollar banknotes no longer was backed up by precious metals. It started getting backed up by America's military power, America's political power, so on and so forth, but there was nothing backing it. So it switched from being hard money into money that just sort of exists, and here's the bonus, it can be printed on demand. So remember, if you wanted to have more dollars pre-70s, you needed to have more gold. So you would have to purchase more gold or have to mine more gold to print more money. It was 1-to-1. Yeah. Now, because you've shifted away from that standard, you have the power to create money on demand with a button. You can print it which, may seem bizarre, but that is the case. So once that happened, you started to build debt. The amount of debt that America had started to surge. Now it's at $38.6 trillion. If you, as an individual, have a money printer on the side at your demand, which you can press, and more money will come out, will you choose to print money to solve your problems, to build things, grow your economy, grow whatever is happening? Will you print more, or will you actually, properly sort of put time, effort, whatnot, the necessary amount of time and effort to escape debt?
If I can push a button and get
money comes out, you will do that. So what does that do? It builds debt. You build a bridge for $10 billion. Are you going to make $10 billion as an income from the building of that bridge once it's completed? No, you're not going to make $10 billion, but that's what it's going to cost for you to make it. So you print money. Of course, in the middle, people pocket the money, so it becomes more expensive, so on and so forth. That happens everywhere. So now you've invested in something, 10 billion, but you're not making 10 billion. So the debt, it grows, it grows, it grows, and grows. You can't pay off the debt. So you need to raise capital every year to pay off the debt you owe. And the printing money aspect comes from treasuries, from bonds. The government is able to do this by issuing bonds. They issue government bonds. Bonds, if you want to buy a bond, and it's the safest form of investment because of America's military power,
safest financial product available in the market.
Their presence, the sort of business happening. It will give you a 4% whatever interest. If it's a 2-year bond over 2 years, 10 years, whatever, it will give you a coupon, and it's backed up by the power of the country. So if the country is more powerful, that bond will be classified as more stable because the country can afford to pay it off. Right? So a lot of corporations, a lot of individuals, to escape inflation from this rising debt to get their 4%, 5%, they put it into the bond markets. The government collects that money, and, well, they pay off the original investors of the other bonds waiting for their interest. It's a little bit like a Ponzi scheme, right? And that continues on. And also they fund whatever they need to fund. They have taxes, they collect taxes, they pay for things. But in a nutshell, right, money is infinite, and they can print more of it. The reason why we have inflation, the reason why, if you went to 2019 and you looked at the prices of eggs, milk, or let's focus on
commodity products,
maybe
sugar,
cars, right?
corn.
Let's focus on the bigger assets like cars or technology, right? It was much cheaper in 2019 compared to today, because in COVID, to avoid a big financial meltdown, they printed essentially double the amount of money that existed. So they doubled the amount of money in circulation. The Treasury bought up double the assets they own, leading to the stock market surging. Elon Musk was worth $30 billion in 2019. Now he's worth $600 billion. Why? Because everybody took their money to jump away from inflation. They put it into assets, they put it into equities, they put it into whatnot. So they went up. Technically not because their values went up, but because the dollar value went down as they printed more of it. So you have a risk on and a risk off environment. Risk off is gold, it's hard money. There's always some sort of effort necessary to extract it. So when times are uncertain, when there is instability within a country, when there is fiscal, monetary, foreign policy instability, you're unsure where things are going, capital goes away from companies, you're like, hold on a second, if so-and-so is happening in America with foreign policy, maybe you're losing your trade partners. There's new laws on taxation where there's going to be higher taxes, or they decided to fund different things, and maybe Apple is not going to perform well as a company because of it. We'll take our money from Apple and we'll put it onto gold and stay safe.
Yeah.
That's the mindset. So you have precious metals, risk off, and then you have equities and stocks, which are risk on. And they rely on the stability of a country, a good economic environment to grow in value. So how do geopolitics affect the value of these two things? Well, currently, as you said, there is a little bit more stuff going on than the prior administration. every day feels like a news event. Every day there are changes. We have new tariffs. We have different trade discussions between countries, and more importantly, it's very much publicized.
Yeah. We also have a plural war going on in Europe, in Middle East, so everything is uncertain.
Well, exactly, and war is disgusting, and war is totally unnecessary. But unfortunately, it's something that's happened since the existence of humans. There's always war. There's always war. There's always conflict. But today, with social media, today with Twitter or X or Instagram, we know more about it. If there is a war happening in a certain region, in the complete other side of the world, now you know that that war is taking place. Before social media, it was all controlled, and they showed you what they wanted to show you, or simply enough, a Western media didn't know that something was happening in a different continent, so nobody knew about it. And when people don't know about it, they don't take financial decisions based off of geopolitical events. So today, war is there. War is unfortunately always there. But we have the exposure to social media, which covers it every single day, and that affects people's investment decisions. And with the rise of the amount of money there is, as they print more money, there is more capital sitting, the value of money is coming down, you have more access to what's happening geopolitically, so you sort of feel like you have to make a decision to put capital somewhere to protect it. And right now, since there is that foreign policy uncertainty, people put it onto risk off, they put it into gold, they put it into silver, they don't put it into equities because that requires stability.
Yeah, thank you so much. I think it's very well put together, and it's always important to educate people so people can really understand how it works.
Yeah.
So let's ask the question, a juicy question, which you call the crypto kid. You've been in the game for 6 years now.
Yeah.
What was the biggest amount you lost? And how your mindset and your knowledge help you to still trust, your gut feeling?
So I've not lost significant amounts from trading necessarily, but I have lost quite a bit in unrealized profits. So unless you sell something that you buy, technically you're not in a loss.
Yeah.
Right? It's dollar value.
You keep your position.
Yeah, you keep the position, you keep your investment, but the dollar value of the position of your investments can fluctuate. It can go up a lot, and it can go down also. So if I look at it from that angle, yes, I went down. 6 figures, multiple times, but it's always fluctuating. The important thing is to know when to get out. And I'll be honest with you, the first few years of my journey, I found it difficult to time when to go out, when to enter. But you learn. It's a journey, and I'm much more. I believe that I'm quite good with it now, and thankfully we have a good track record on the channel and the analysis. So I've gotten way better at it, and that comes with experience. So yes, I've been down 6 figures, and unrealized profits went into sort of, they dropped. But for my trading, no, nothing much, and I'm happy about that. I used to be a day trader, but I started to do leverage trading with a longer time frame. And yes, your positions.
You're becoming a whale.
The profits there, they fluctuate. They sometimes go down, but it's temporarily. So you have your stop losses and whatnot. But I started to trade more sort of looking at the next few weeks, next few months. That's my leverage trading, and I have a good win rate there, so mostly profitable. But my income comes from my trading, my investments, when I decide to take profits, and then we have the media business, which generates me my cash flow. and I can sort of refunnel them into a bag, into a pot that I'm going to hold for the next 15, 20 years.
Amazing. So I want to ask some question about crypto and mindset. So what sounds crazy about crypto today, but will be obvious in 5 years?
What sounds
crazy about crypto today? Like something that everything has in mind, like this is, crazy crypto people.
Well, it
will be obvious, like in 5 years, everyone's going to be like.
It's a fantastic question. I think when you still ask people about what do you think about Bitcoin, before they used to call it scam 2-3 years ago, because of the things that happened in the crypto industry that are non-reflective of Bitcoin as an asset, right? But now you have the confirmation from BlackRock, from Fidelity. You have the confirmation from President Trump's administration. Yeah. So they're like, okay, this is maybe not a scam, but why do we have this? Why does it exist? It's just this magic internet money that I can't even grasp with my own hands. How can this thing be the future of money? Why would I stop using dollars, and why would I pivot to Bitcoin instead? I think that's the big question. And the truth is, it all lies in understanding the technology behind Bitcoin, which is blockchain. You need to understand how Bitcoin works, and you need to understand how the current system that you use works. And then you will be like, oh, I get it. This is why I need to buy. So I'm going to quickly explain that to you in the easiest way possible. All right? So let's look at the financial system, because we touched upon it. You can print infinite amounts of money. So when you go to work, you earn a certain amount of money, right? Let's say you earn, just as a hypothetical figure, 100K per year, right? That goes up as you get promoted, whatnot. But in the background, they're printing a bunch to pay off their debts. They're increasing the supply. The demand doesn't match. Yeah, you get a bonus here and there. You get an increase on your salary, but it's nothing in reflection to the inflation that's happening on the actual circulation of the amount of dollars there is in existence. So you go through something called the cost of living crises, where it's just getting more and more expensive to live, to exist. And there's this huge gap of wealth between people that are struggling and people that are very wealthy. Because when this fresh new liquidity is created, the banks, they take in 0% interest loans, they get this vast amount of wealth, and they pump it into the equities market. They pump it into gold and silver. So they're getting rich because there's asset price inflation. When you print money, it goes into assets. But if you cannot access that system of getting credit to invest, or investing what you have into the markets, if you don't know how to, then you're stuck. And life just gets more and more expensive over time. So there's this huge gap between the the people that are in the middle class and lower socioeconomically.
Everyone is saying now that the middle class is going to disappear at some point.
Yeah, the middle class is...
Because middle class is becoming poorer.
Especially with
AI.
The
wealthy is becoming wealthier.
Especially with the AI.
Yeah.
And its development and how it's going to attack certain jobs in that middle class. Yeah. So there's huge amounts of frustration and uncertainty. So they print the money, whatever. There's more inflation than you actually make. So that's sort of the fundamental of the current financial system. Then you make your money, you put it into the bank. If you actually read into how sort of banks work, there's something called fractional reserve banking, which is what every bank operates with. When I deposit my $100,000 that I made per year into the bank, it's a number on the screen. I don't actually, that 100K is not there. Okay?
Yeah.
The bank can take the money you put in,
invest it,
lend it, and invest it. So if hypothetically everybody went to that bank, the customers of the bank, and they wanted to withdraw all of their cash now, they wouldn't be able to get it back because the bank just doesn't have money. So the bank would go through bankruptcy, the government would have to print money and bail them out. And at that point, you may have invested into stocks through your bank, you may have invested into things through your bank. You're only going to put the initial, they're only going to give you, and it's going to take years bunch of lawsuits and whatnot for it to take place. But you're only going to end up getting the money that you originally invested or put in. The unrealized wins you have with your investments, they're not going to be given back to you. So you don't own the money that you put in the bank, or you technically do, but they get to do whatever they want with the money you have deposited. That's just how it works. That's every single bank.
Yep.
So this is the system, right? This is the system you're stuck with. You transact with money that has no backing. They can print on demand, put into the bank, don't even own the money that's there. That's what you're stuck with. Then you look into Bitcoin. Now, Bitcoin is limited to 21 million Bitcoins. There's only going to be 21 million Bitcoin in existence. We will reach 21 million Bitcoin somewhere around 2134. That's going to be the rough time where we reach that 21 million Bitcoin. Bitcoin is money. Bitcoin is a store of value. How? Now, there is no tangibility to it. You can't hold a Bitcoin in your hand, just like how you can't hold IP rights in your hand, just like how the money you transact with on a daily basis with your Apple Pay or credit card, you don't hold it. But the difference is, in the financial system, there's trust. You trust the bank.
Yeah.
You trust the government to bail them out if something goes wrong. You trust SWIFT to process your bank transfer through the week. There's always trust. You're always trusting humans. And sadly, humans are corruptible. Sadly, humans have their own agenda. So there's always trust necessary for things to take place. God forbid you have a political view that that government doesn't like, they will take your assets, and it's happened before.
They will froze your assets.
It's happened in some of the biggest countries. You have a political opinion, and I think everybody should be entitled to their opinions. They will take your assets. If you are having certain beliefs, and they don't like those beliefs, they will take their assets. There's about 1.4 billion people in this world that don't even have access to a bank account. They can't even get paid. They can't even transact. How can they escape poverty? Mostly happening in Africa. They can't get bank accounts. Why? They don't want to give it to them. So this is the system, right? With Bitcoin, it's fully democratized. Anybody can have a Bitcoin wallet. If you have access to some sort of a technological device, chances are you can set up a Bitcoin wallet. Anyone in the world can have a Bitcoin wallet for a very little cost. Very, very little cost. Anyone. Doesn't matter who you are, what you believe in, doesn't matter. Anybody can have access to that financial system. So, and it's completely trustless. So where you're trusting an intermediary in traditional finance that can sort of freeze and manipulate it based off of their own agenda, with Bitcoin, there is no trust. The way that transactions go through, instead of a SWIFT system, it goes through a distributed network of thousands and thousands and thousands of ASIC miners placed all across the world. These are computers incentivized monetarily with Bitcoin rewards for breaking down complex mathematical equations which open up blocks. It's like, think of it as a computer solving a jigsaw puzzle, a Rubik's Cube, and once that Rubik's Cube is completed, it goes into the next one. These are blocks, okay? These are called blocks. Approximately, now I'll get the number wrong, but somewhere around the 20 block range, you have confirmation. These distributed network of GPUs would have broken down these blocks and would have verified that the Bitcoin you're sending from A to B is authentic, and it's not controlled by a single entity, this transaction. It's by a wide group of individuals. They don't care who you are. They just want the transaction to go through, and they want to earn their Bitcoin as a reward for processing this transaction. So these are called miners. They allow transactions to take place. And in doing so, they will receive a small Bitcoin reward. And the supply and demand and the economics of Bitcoin go with the more miners there are, the more hash power there is, the more power there is to contribute to the Bitcoin network. It self-adjusts every 2 weeks. So if computers get stronger, faster, and they can break these equations faster and faster and faster, it adjusts, it becomes more difficult. So those rewards always sort of stay around the same, and it's always monetarily incentivizing for people to mine Bitcoin because Bitcoin's price appreciates over time. So you have this decentralization, you have transactions taking all the time, right? It's a completely trustless and a permissionless system that allows you, somebody in the other side of the world, doesn't matter what they believe in, who they are, they can access the financial system, right?
Thank you. So let me be a little...
So you have, you can choose between these two.
Yeah.
You can choose between these two.
Thank you for the explanation. I want to ask a question to, what is the worst case scenario that will make Bitcoin crash?
Well, people say quantum computing. You've probably heard this a lot.
Yeah, but I know it's not possible.
Well, it is possible.
Oh.
Yeah. So they say, quantum computing, what if computers get so strong they can crack into the encryption of Bitcoin, which is SHA-256? What if they can break in?
So is it the biggest
break into your crypto
challenge?
Well, I'll get to it. So they can break into your crypto wallet and take all of your Bitcoins. Mm-hmm. That's what they say. Now, the quantum power necessary to get into a Bitcoin wallet, that power is still about 15 years away. Okay?
Okay.
Now, the amount of quantum power to break into your bank account is there in like 2 years. We're going to get to it. A quantum computer can break into your bank account, can decrypt your credit card, whatnot. That's going to be your text messages. We're going to get to that in like 2 years. All right? So there's a bigger immediate threat to your bank account than there is to your Bitcoin wallet. Mm-hmm. The thing is, the banking system, the messaging system, it's centralized. So when they go into a quantum-resistant encryption, which will happen, it will all be done overnight. They will install this update and suddenly everything is quantum-resistant. Okay? Maybe there's this gap where a couple of accounts get exploited, whatnot, mm-hmm. but it's a centralized system, so most likely you'll get your refund and it will be okay overnight. With Bitcoin, you need to generate a consensus amongst these. Well, there's a difference between nodes and the computers that are breaking down the encryption per block to allow a transaction to go through. But just for this interview's purposes, let's classify these decision makers as also these miners, all right? So there needs to be a consensus, an understanding, an agreement between these miners. Has to be a majority agreement that, okay, quantum is a threat. We're going to now upgrade Bitcoin. Mm-hmm. It's called forking it, and we're going to start mining, putting this hash power into a new Bitcoin, not the current Bitcoin, but a new Bitcoin, and we're going to start to classify this as the Bitcoin. So here you're actually creating a brand new Bitcoin, right? Same Bitcoin blockchain. The blockchain is the same. So it's a derivation of Bitcoin, okay. But it's a quantum-resistant version. But it's not a threat to you. It's not a threat because when they eventually decide to do this...
If they decide to do it.
Well, they will.
They will have to.
They will have to, right? So when they decide to do this, your Bitcoin that you own on the original Bitcoin, it can be converted to the new Bitcoin one-to-one.
It's like the upgrade.
Yeah, so
software upgrade, like
exactly.
on your Apple phone.
Yeah, so there's a one-to-one upgrade.
Just go overnight and then you have the new Bitcoin.
Exactly.
Formula.
So it's not an issue. The issue lies in the lost Bitcoin and Satoshi's wallet. So Satoshi is the anonymous figure who created Bitcoin, and his wallet owns about 1 million of the Bitcoin. So 1/21th of the entire Bitcoin supply is owned by Satoshi. Now, ever since Bitcoin was created, Satoshi has been silent. He's not moved.
Will have to show.
He hasn't moved his Bitcoin. Those Bitcoins have not been transacted, moved. It's just there, right? And people say that's there just to prove the security of Bitcoin, because you have this huge jackpot of like $95 billion that people, the greatest hackers in the world, would have loved to crack into and get this jackpot. But people say he has this wallet with 1 million Bitcoin just to prove to the world how secure Bitcoin is. Even the greatest minds cannot get into my wallet. It's the biggest jackpot in human history. Nobody can get into it. That proves Bitcoin's security. But when you see this upgrade, he needs to move his coins.
So he will need to speak with the other miner.
Yeah, because if he doesn't move his coins, right, and upgrade to the new wallet,
it can be hacked.
Then the quantum computers can get into it and have control of 1 million Bitcoin. There's also about 2 to 3 million Bitcoin that has been lost. You know, people have lost their keys, people have lost whatever. They don't have access to it. So you're looking about 3 to 4 million Bitcoin that can be potentially compromised from quantum computing. But these Bitcoin that are compromised, the only bad thing that can happen is they get sold into the market. You don't actually break Bitcoin. You don't actually affect the Bitcoin network with these compromised Bitcoin. The only thing these people can do is take this Bitcoin and sell it. That's the only thing they can do.
Yeah, but it will change the ownership also of those Bitcoin.
Well, it's fine.
Because I hack it and I take it into my name, and then I will sell to you.
You can only sell it. So the only thing that can happen that's bad for Bitcoin is that these hacked Bitcoins can now be sold.
But don't you think that...
Which will affect price.
Exactly, because if today, like you're saying, institutional are starting to use it, but we are talking about 5 years.
Well, 15
from now,
years.
5 years, because we don't know with AGI and all the AI technology.
Well, think about
every year
in 15 years, right? Let's say the price of one Bitcoin is worth $5 million. Very possible with the reasons that we went into. Let's say it's worth about $5 million. Today it's worth $80,000. Okay? So when it's at 5 million, it's possible that we see like a quick crash, you know? But imagine the amount of institutional buying and demand there already is. Countries are fighting right now to see who has more Bitcoin. So imagine an opportunity when there's going to be 3 to 4 million Bitcoins that are available to be sold. They're going to be grabbed up by countries, institutions, individuals. So it's going to be like the biggest buying opportunity in history when this takes place.
It's also going to be the biggest opportunity for quantum computer race to crack Bitcoin, because what you're saying is that who's going to make the most money?
It's
the people who crack the code. If you have to crack something in your life, it's Satoshi wallet.
Exactly. So
there is no other point.
It could be a fast, quick crash that Bitcoin experiences. Maybe
$95 billion.
Yeah. By then, it's going to be a lot.
It's a good, mantra to get.
Yeah.
If I'm a hacker, we're definitely going to be on my, on my board.
Yeah, so it's going to be a big amount, and it's possible that we experience a correction when that time comes. But it doesn't concern me because it doesn't change Bitcoin.
It's still going to be an asset. It's still going to be
demand, still the same technology,
decentralized.
Fixing the same problem that exists today probably will be worse by then. So I'm confident and I'm excited. Actually, I'm looking forward to it because when it does, it's going to be the biggest buying opportunity ever. Yeah.
Thank you so much, Efe. Let's switch a little bit more into the mindset. Thank you for explaining all those concepts. I think it's very, very useful, and I'm very happy that we discussed that. I always want the audience to understand that you have to go beyond, crypto is a scam, or this is not real, or you have to put your money in one, box. Educate yourself.
People call things a scam when they don't understand it.
Exactly.
Now, if you understood the system we operate on today, you would call that a scam.
Yeah, the financial system have been crashing over and over, and people are losing their house. It's like, when are you guys going to learn the lesson?
Well, it operates in cycles. It's operating in very predictable cycles, where you go up, then everybody loses everything, then you start to go up again. This is because the current economic system is based off the Keynesian model.
Yeah. And
right?
but there were nothing else to invest in before, like Bitcoin and crypto.
Only the
you will
aristocrats.
have like real estate, or you will buy gold. But like you mentioned, okay, you're gonna store gold, but at some point you need money to buy stuff. You still cannot buy in gold.
Yeah.
You can buy in crypto, but definitely not in gold.
Yeah, not everybody can
afford.
Create a well. Yeah, I mean stocks. Yeah, there's fractionalization nowadays, but it's not as common. But forget now. Go back to the previous century, right? There's only the aristocrats, the guys that already have money. They were the ones that are allowed to invest into the markets. They were the only ones that could take advantage of investments.
Yeah, preservation of wealth. And
now the barrier to entry has gone down, but crypto makes it accessible for everyone to participate. Every single person.
So thank you so much. It's just like I think we've gone through different phases a lot.
Yeah.
I love that you have your passion, that you still like want to do that. I asked you a question when we were not filming, so I'm going to ask you because I think it was interesting. So being in the crypto world for 6 years now, where do you see yourself like in the next 10 years? Which you're going to be only 28, just for the audience.
Yeah, fossil. I want to be acting. I really hope that I would have done some acting.
Okay.
I want to have taught young people financial literacy.
Okay.
Because the sad truth of capitalism is that if you want to pursue what you want to do and live comfortably, you need to have money. And if you want to have money younger, you got to start younger. You need to start investing younger, start getting work experience younger. People don't know when you're young where to sort of start, how to sort of approach it. And I've been lucky that, I was in the right country, right resources. A lot of people have that, by the way, but they still don't do anything. But I had my ambition, and I started young. But I would love to have helped kids who are also ambitious, or maybe not ambitious because they don't know what's possible, to feel inspired and pursue a path where they can access wealth earlier on, and they can pursue what they really want to pursue, not after 65 years old, but maybe at 30 years old or 40 years old. So those are the two big things that I would like to have done by 28. And obviously, I hope my YouTube channel as crypto grows and becomes a bigger topic, I hope that our channels also develop and grow at the same pace.
Would you like to retire by 30?
No, I would never retire because there's so much to do, so much you can do. And when you retire, you sort of, you can lie on a beach, travel, buy the things you want to buy, but that's fast. You can only do that for so long.
You feel it's boring.
It does get boring. You need to find purpose.
You can do that while doing your video, and because we're in a digital world where you can basically do your video in Thailand, in the beach.
The most satisfying thing is purpose. Running after something that you feel is important. Elon can retire. Why does he not retire? Why doesn't he not stop? Because it's boring. Would you rather build rockets to go to Mars or lie on some beach? What's more cool and interesting and satisfactory? It's building rockets.
I'll say depend what's your work. If you're following your passion, I agree 100%, you never retire. If you are, a blue worker working in the mine or stuff like that, of course, you just look at what's after because it's not fulfilling. So I'll say depend on, what are you actually doing. And
well, it depends
do you work for money, for putting food on the table, or are you working because this is something that
It depends on what the individual wants. I mean, if I had a family and I had kids, maybe I would have said, no, I actually want to just fully focus on the growth of my children. But that's...
We'll talk about it in 10 years.
Yeah,
where are you on what's your purpose, and if you still want to work?
So, look, it just depends on person to person. The more you travel, the more you experience, the more you do things, that end goal would change. But I'm just one of those individuals that can't see myself stopping working because I wouldn't be happy. I would be like, I need to do something.
Yeah.
That's just who I am. And maybe you're different, and that's perfectly fine, but I just don't see myself stopping. I'll do something, whatever it is.
Amazing. Thank you so much, Efe.
Thank you for having me on. Thank you.
Thank you.